right, welcome back to the Know Your Numbers REI podcast. Your host, Chris McCormack. Just honored to be with you guys. Again, I'm a CPA, certified tax planner. Some people don't know what a certified tax planner is. I can get into that real quick. The American Institute of Certified Tax Planners down in San Diego, they authorize and license a handful of CPAs, EAs, tax professionals per year, and you have to go through some advanced tax planning, continuing education. You have to meet some integrity requirements, of course. And basically what their goal is to educate and empower CPAs and EAs and tax planners, tax strategists all across the US to bring tax saving strategies to their clients throughout the year rather than just prepare taxes. And so there's about 700 or 800, it might be up to 1,000 of us scattered throughout the US, and we're all devoted to the greater service of bringing clients tax saving strategies rather than just pushing paper and making sure that our clients are in compliance. Although that is a part of it, right? Compliance is a huge part of your tax life, and we want to make sure that you're compliant and doing everything that's required of you. So oftentimes I say CPA, certified tax planner, and people don't really know what that means. So there's a little background. Today, we're going to be talking about 5 tax strategies that every real estate agent should know. We're typically talking about investors and people investing in real estate, but we also know that there's real estate agents out there. Maybe you're investing in real estate, maybe you're not, maybe you're thinking about real estate agent, maybe you're a wholesaler. These probably apply to you as well. The reason I want to do this is because I've personally seen some of our real estate agent clients that before they've worked with us, they were overpaying on taxes, they were frustrated, they were messed up on their books, and now since working with us, they've saved tens of thousands and a total of over $100,000 on some of our clients in taxes through the result of obviously bookkeeping cleanups, but also tax planning, tax strategy, using the tax code to their advantage. Most real estate agents do overpay on their taxes because they don't understand how to take advantage of the tax code. I've talked about the tax code being a playbook. It lays it out for us. We need to understand it, and most real estate agents are overpaying on taxes. Whether you're new to the business or a seasoned professional, today's episode could save you thousands of dollars. I understand that people, especially if you're beginning, you're not sure how you can save thousands of dollars in taxes, but I'm telling you, there will be things to glean from this episode. We'll break down the top 5 tax strategy that every real estate agent should know, should be using. Smart deductions, entity structure, retirement savings. These are strategies that we have used personally on our real estate agent clients, and again, have helped save them over $100,000 in tax. And also, if you're not a real estate agent, don't just skip over this. These are practical strategies that can be applied to you, but we do want to take the liberty of addressing the real estate agents. But don't think that if you're not a real estate agent, you don't have anything to gain from this. I'm sure that there will be things that stick out to you and can be applied to your business. We know that many real estate agents don't treat their business like a business when it comes to taxes. You're just fighting to stay above water. You just want to serve your clients and get them the house of their dreams and make the money. And as a result, you miss key deductions, you fail to track expenses, you don't structure your business properly, and you're left with higher taxes and lower amounts of money to show for it. I get it. You're busy. Again, tending to your clients' needs, trying to get those dream homes, and trying not to lose a listing. I know how stressful that can be. And you're on strict timelines. You feel like you don't have time to even think about taxes, consider taxes, let alone plan for taxes. And I'm just telling you that if we can get you on the right path, get these 5 things into your life and help you apply them, you're going to see that not only can you serve your clients, not only can you sell more houses, but you can keep more of the money as a result. We had a client, let's just call his name Tony. I don't like to use the real names. He was a successful agent. He had about a gross income of over $500,000. He was at risk of paying nearly 40% of that in taxes. He had messed up books. He wasn't working with a tax strategist, and he just was on the edge of giving way too much money to the US government. When he made use of a growing real estate portfolio and his books got in order, he was able to save over $70,000 in his first year. He has since gone on to expand his portfolio into even different countries. He's not just investing in the US, he has properties in different countries as well. And his family continues to grow too. So this is possible, whether you're making $500,000 like our client there, or you're just getting started. It is so important for you to understand these 5 strategies. Without smart tax planning, agents are going to work hard, work their butt off, but lose a significant portion of their income with unnecessary tax payments. That was like our client Tony, who was at risk of that. Had he not reached out to us in January of 2023, he would have lost a lot more money than he saved in working with us. So the 5 tax strategies. The first is setting up the right business entity. All right, so you've heard of them: LLC, S corporation, C corporation, sole proprietor, partnership, general partnership, limited partnership. There is so much to think about and go over. The question is, what is the right entity for you? We know that if you make $100,000 as a real estate agent and you don't have the right entity structure, just on back of the napkin math, you could be overpaying $15,000 in taxes. And that just goes up. That doubles every time you increase. So that $500,000 without the right entity structure, that's 15 times 5, which I believe is $75,000 in tax overpayments if he did nothing about that. So right entity structure. Right off the bat, we want to make sure that's the case. Maximizing deductions. You got the home office, you got mileage, you got marketing, you got education, you got travel, you got business conferences. You have to be making use of these. Not only do you need to know about them, you need to apply it, right? Knowledge is not power, it's the application of knowledge. I can gain a bunch of knowledge about healthy foods, right? I've had an encounter with somebody who we were at an event, and he started talking about like all of the things that you're hearing about when it comes to health. He was talking about the seed oils and the processed foods and the chemicals and the pesticides and all these things that are just inside the food that we're eating. And he was talking about the problems, and I was like, okay, he's very passionate about it. But then he got talking about how he is, and I don't mean to make light of and something that he's struggling with, but cigarettes. He's smoking cigarettes on a regular basis and talking about the unhealthy foods and also eating the unhealthy foods. And so it's like there's this gap, right? So he knows that there's certain things that are not good for us, and he's talking about them and complaining about them, but he's not applying that knowledge. And so you might know that there's deductions that can be had: the marketing, the travel, the continuing education, the mileage, the home office. You might know these things, but if you're not applying them, you are costing yourself thousands and thousands of dollars. Just like that person is costing himself good health, you are costing yourself financial health and missing out on key tax savings. So you got to maximize your deductions. You got to apply the knowledge. Wisdom is knowledge applied. Knowledge is not power. Wisdom is where you see the power come to life. Track expenses year round. You have to have good bookkeeping set up, not just tracking, but keeping it in order, because you can track your expenses on a bank statement. You can have QuickBooks set up, but not do anything with it, right? That's the same thing. Again, it's not the application that we're looking for. Our client, Tony, who I was talking about, making $500,000 a year. One of the big things that we did was just clean up his books. And through that, we found him tax savings. We found that his profit was actually overstated because certain things were not categorized properly. How much are you overpaying because you don't have the proper bookkeeping structure to make sure that you are keeping the most amount of money in your account, and to even make sure that things are as they should be, right? If you are like Tony and overpaying on taxes because your books are not set up properly and they haven't been for a number of years, well, that's a problem. We need to get your books set up so that we know that the profit that is being stated on your tax return is actually the profit. I see so many people, they have, say, a profit of $100,000 in their business, and when in reality, they've spent a lot more than that. They've spent maybe $50,000 extra, but because things aren't categorized, or they're categorized incorrectly, or they're on the balance sheet versus the income statement, they're overpaying on taxes. Their tax return isn't even accurate. And that's a problem. We need to get the bookkeeping structures set up properly. We need to track expenses year round. Number 4, leverage investments. Real estate. We used a real estate portfolio that our real estate agent client had to save him $70,000 on one investment property. We used his investments that were already set up. It wasn't like we told him to go buy 5 new properties. No, he had these properties. He just wasn't leveraging them properly. Now, we do have clients where we say, you should buy a property so that we can save on tax. It often comes in the form of those who have sold properties and now they have capital gains tax, or maybe they just have a large amount of income that they're trying to offset. And it's like, yeah, we're thinking about buying a property, and we say, pull the trigger, go and buy that property. But this client, he saved $70,000 just by using what was already in his hands. It's crazy. And now he's been able to scale his portfolio even more. He's added more kids to his family. Like, it's beautiful. I love to see it. But real estate is not the only way. You can leverage other investment accounts, retirement accounts, HSA accounts, stock brokerage accounts. Yes, there are ways to tap into stock brokerage accounts and use it for tax advantages. We're working on a case right now where we're going to be able to tap into about $100,000 that they have sitting in the stock brokerage account completely tax-free. It's an amazing strategy. So that's 4. Number 5 is use tax planning, not just tax filing. I don't want to belabor this point. We talk about it often, but it is so important. Tax planning throughout the year, not just tax filing, not just giving yourself a recap of what happened. It's actually proactive advice. It's like going to the dentist, right? If you go to the dentist once a year or even once every other year, you're gonna have some cavities that need to be fixed up. And so, yeah, you can get the cavities fixed up, but you can avoid the problem entirely had you gone to the dentist the regular 2 times a year, right? And so tax planning is the same way. If you are just meeting with a tax preparer once a year, you're gonna have the cavities, which is the overpayments on taxes. And maybe you have the money sitting aside, but it's painful, it sucks, it's not necessary, and you can avoid it completely by tax planning. Just like you can avoid the cavities completely by going to the dentist regularly, flossing regularly, brushing your teeth regularly. You can avoid the overpayments on taxes completely by meeting with your accountant regularly, setting up the right business structure, maximizing deductions, investing strategically. This is all available to you as real estate agents or just business owners in general if you do it, if you apply what is learned here. So for you guys, the people that are listening, I just covered a lot, but I think I would be remiss if I didn't challenge you to take action. So of those 5 things, whether it's the setting up the right business entity, the maximizing deductions, the tracking expenses year round, the leveraging investments, or the using tax planning, not just tax filing, I want you to focus on one of those, whether it's your business entity, your deductions, your expenses, that means the bookkeeping, the investments, or the tax planning versus filing, and focus on that. I would say this: if you don't have bookkeeping set up, maybe you have it set up or it hasn't, but it hasn't been cleaned up, then that should be your focus. It should be. That is where tax planning takes it to a whole new level. If you don't have your books cleaned up and you come to us, we're going to have to get that cleaned up before we can offer any sort of tax plan or tax strategy, because we need to know how much you're actually going to be paying in taxes, and we do that by looking at your books. So if you don't have that, focus on that. If you do have that, then let's consider entity structure. Are you optimized? When was the last time you sat down with the tax strategist to determine if your entity is optimal? Excuse me. Okay, and maybe entity structure seems too daunting and you want to wait to do that. Then it's maximize tax deductions, right? Maybe you've listened to this podcast, maybe you've done your own research and you know of these strategies, the home office and the other deductions that can come, the mileage, the travel, the continuing education, the marketing, all that stuff. Maximize deductions. Start to think about how you can apply this. Oftentimes, the best step is to reach out to a tax planner. Make sure that you're tracking the things properly. You're separating business and personal. You're keeping the receipts that you need to keep. You're writing off the things that you can write off. There are so many people that are missing deductions, and it's costing them thousands of dollars a year because they don't know that they can deduct something that they're currently not deducting. And maybe it's leveraging investments. Maybe you have retirement accounts, you have stock brokerage accounts, you have real estate properties, but you haven't used them properly. Leverage that. One of these 5 things I want you to apply and take action on today. If it is meeting with a tax planner, if that is part of the action steps, please reach out to us. I said it on a recent episode, I might have said it on this one. We do offer a free consult to those who are frustrated and feeling overwhelmed when it comes to taxes. They feel like they've overpaid. And so what we will do is we'll get on the phone with you, and assuming we think it's a good fit, then we'll collect some documents, review the tax returns for the previous 2 years, and identify any mistakes or missed opportunities and come with findings. And from that, we will get a game plan together and help you take steps on that game plan. So if that is something that you would find interesting or would be of value to you, please reach out. Find us using the calendar link down below. You will get on the phone with myself. I'll get to connect with you, understand a little bit more about what you're dealing with, and create a plan to move forward. If that's not you, then still apply something that you learned today, whether it's the business structures, the investing and managing your investments in a tax smart way, leveraging the investments, business deductions, or any of the other 5 things that we talked about. Until next time, God bless you and keep moving forward.